You listening to the Bear Trap Crypto, and this is not financial advice. I am not a legal financial advisor nor a financial advisor. I'm going to give you 5 rules never to break in crypto today, and some good reasons why not. Hopefully you find them resourceful. Never invest more than you can afford to lose. This is not gambling, it's investing. But some projects, like businesses, they don't always do exactly what you're planning to have them do. You know, it's new technology, it's innovation, it's new. So sometimes it takes a while to get things off the ground. So if you need a certain amount for rent or your necessities, put that to the side. This is not money that it's not a get rich quick scheme and you're going to be rich next week. No, it's not. It's possible, but not that type of deal. Crypto has shown gigantic leaps since the beginning. There's been years in between the big payoffs, but just years, not like a lifetime. It's shown its potential since the beginning, literally. So you can count your chickens before they hatch with crypto, in my advice. This is my personal opinion and in my experience. But you don't want to put in money that you will have to take out, because then it will be considered a loss because you may pull it at a time when it's down. You don't want to do that. You want to be able to wait until those gains come. Every 4 years is a Bitcoin halving, and it goes on a massive parabolic move in that time span. After the halving, it makes a parabolic move and enormous amounts of money. People, I'm sure you've heard by now, people have made millionaires in that time span and things like that. You want to be around for that. So you don't want to put in money that you need. You want to leave that money alone, so to speak. You don't want to plant a seed, right, and dig it up every day or dig it up over time. You want that seed to sprout and grow for you. Number 2, always invest in the red, never the green. This is something that took about a year to learn for me. I was trying to figure out, okay, well, the ones that are in the green that have plus signs, that means they're gonna keep going green. That's a no. There's something called a cool-off period, and that's where the crypto stocks, etc., whatever you've invested in, it has peaked, and then people are taking profits and allowing that asset to breathe a little and come down. So that's the cool-off period, and that's when the stock, crypto, or asset is taking a breather. Profits are being taken. It's going to take a dip. It's actually going down in the green. The red is exactly where you want to be. I believe it was Warren Buffett that said, you get greedy, you should be greedy when there's blood in the streets. Well, when you see red on a stock or asset that you know is a good stock, good investment, you see red, consider that your green to go and purchase. Not advice. Some I've learned. So red means purchase. Diversify your portfolio. You don't want to have one stock, crypto, whatever, that you're invested in and put all your eggs in one basket, and then that basket tip over, get hit, anything disastrous come. And go and research a crypto called Terra Luna, and that should explain and exemplify my point on this. Number 3, diversify your portfolio. The more baskets you have, even if you only have a dozen eggs, I'm just going to say if you have $1,200 you're starting with, you put at least one of those eggs, and you should have 12 different baskets. I wouldn't put all of those eggs in any basket. Okay, number 4. These are, to recap, these are 5 big rules never to break in crypto. Number 4 is never neglect to take profits. This part is going to take some strategy and homework on your part. None of this is financial advice, by the way. But this area it's not something that I could explain to you to aid you and direct you. It's like a instinctive type thing where you're going to have to identify your comfort zone with taking profits. Are you looking for 5x, 10x, 2x, 3x? Whatever makes the most sense to you. Always look at the market cap. Always look at the venture capitalists. I mean, these are things that I do when I'm investing. I want to know who's starting this project. Are these people known for rug pulls or anything like that? Or are they, techies? Are they, what are they? And what is their background? I want to know what the market cap is, because if it's a lower market cap, the higher the gains would be, because it's going to be more risky. As market cap rises, the asset becomes less volatile because the risks are lower and everything like that. So you need to figure out where you want to take profits, but take your profits. Because when you don't take profits, the market goes up, but it also goes down. In this early stage of our investing, you're probably, if you're in a seat where you're going to say 5 to 10 years, you probably will not see any losses. But if you want to win and keep winning and winning, the more you take profits and keep your hand on the pulse of the market and what the market is doing, the more gains you will make. I'm not saying that twice a year, 3 times, 10 times a year, you're going to have shopping carts of money. What I'm saying is when the asset do surge or spike, you're going to be able to take some profits. And when it take a breather, like we talked about earlier, when it takes a dip and goes in the red, reinvest. It's almost like having 2 different flavor scoops of ice cream versus 1 scoop. As a child, if you put it in, correlate it to children and how children think, they would prefer 2 scoops. You get 2 different flavors, so you're going to get twice the money. You're going to win twice on one asset, and you can do that over and over and over again. You don't want to miss your opportunities, because if you're becoming an investor or if you're choosing to invest, this is how you're going to earn your living. So you want to maximize all of your potentials and opportunities. So you have to take profits. You should be doing your homework daily on the assets that you're invested in, and you should be taking profits. If you don't take your profits, you can set it and forget it. It's a new sector. You give it 2 years and come back, you should still be, like I said, Bitcoin has a halving every 4 years. So if you set it and come back 2 to 4 years, you'll be pleasantly surprised either way. But here's the thing. In that time, I'm just going to give you, say, if you have invested $10,000, that $10,000 may have hit $1 million. I don't like the set it and forget it, type, hodl type. I don't believe in that. I've just learned, I've seen too much. And what I've seen is that these assets shoot way up and then they dip way down. And sometimes they come back to where they were. So you may put 10,000 in. You may have at one point had $1 million potential. I mean, this depends. You would have to invest in a very low market cap and, so forth and so on. Potential, depending on the asset. You may have had $500,000 off of that $10,000, $100,000. And if you set it and forget it, you come back in 2 years, you may have $12,000 and be excited, not knowing that you missed your shot at withdrawing that 500,000, 200,000, even if it's 100 or 50,000. You may be back down to between 10 and 20,000. So you have to, I would stay in tune with what's going on in the market if you're going to invest. It's not, I wouldn't call it smart to turn your back on your money. You want to keep an eye on it. Number 5, not your keys, it's not your crypto. If you leave your crypto on a platform, that platform have the right, if they go bankrupt or if they file, Chapter 11, or go bankrupt, claim bankruptcy, whatever, your money goes down with it. Your money goes down with the platform. In crypto, we have cold storage, which is a ledger or a Trezor. It's a device that you purchase. It comes to your house. It has keys. You have to write down those keys. Do not take a snapshot of them. Follow the instructions and put them somewhere safe. Those keys are your literal keys to your vault of crypto. If anyone gets your keys, you can consider your crypto gone. They will steal your stuff. People steal. Big shock, right? So you have cold storage. That's considered cold. Trezor, ledger, and I believe there's a few more. But that's a physical device that you purchase. It comes to your house. You download it. You download your crypto from the platform to the device. Put it away. The other form of storage that's safer than a platform is a wallet, digital wallet, trust wallet, SafePal. I mean, you got wallets. They got wallets, a bunch of wallets. You also will receive keys or a set of names, whatever, and those are your keys, like the hardware or cold storage. Those are your keys for your wallet, and it's safer. That belongs to you. It's like your wallet in your pocket, Can somehow you get hacked? Yeah, there's a lot of ways. It's possible, and cyber wars and stuff like that. There's been rumors of it. I haven't experienced any, and I hope I don't. But you just have to be careful, and this is the safest method to protect yourself. All right. Well, I hope you enjoyed it. It's the Bear Trap Crypto. And don't forget to like, subscribe, and I'll catch you on the other side. To the moon. Peace.